Copart has returned an incredible 62% in the past year, rising to an all-time high of $57.28. Today we'll be looking at the perfect, highly profitable, boring stock which Peter Lynch would love, as it is the kind of stock where it's not an attractive sector, so there is not a lot of innovation and not a lot of competition in that sector, but this company keeps making consistent, increasing free cash flows. Additionally, we'll be looking at if TipRanks is correct in giving this stock an 8 outperform with a moderate buy from analyst consensus, but a decreased activity from hedge funds and the latest insiders selling around $19 million in shares. So today we'll be looking at Copart, more than a vehicle auction company. Copart is a leading global provider of online auctions and vehicle remarketing services. However, it's not that simple. This business enables the reuse and recycling of vehicles and parts, and you may be wondering, why are both cars in the pictures you're showing us wrecked? Well, this is because this company specializes in finding or obtaining wrecked cars from either individuals or through their partnerships that they have with insurance companies worldwide. And then what they do with these cars is 3 ways. First of all, these cars may be restored and auctioned through an online or a physical channel. Then they may be sold to dismantlers where they will be broken down to parts and sold like that. And third one, these vehicles may be scrapped and sold as raw materials. So they make use of every single vehicle that they obtain. They break down their future growth strategy into 4 levers. The first one is to acquire and develop new vehicle storage facilities in key markets. They currently operate in more than 5 markets worldwide, such as the US, Canada, Spain, the UAE, and Germany. And they have been acquiring new storage facilities every single year. The second one is to pursue global, national, and regional vehicle seller agreements. So they want to go one step further and increase the number of customers they can actually reach. The third one is to increase their service offerings, which is probably also linked to the fact that they want to move on to different geographies and expand their locations. And fourth, to expand the application of VB3, which is their online auction platform, into new markets. Where this company really shines is their financial analysis. And I do believe that this company is what Joseph Carlson would call the perfect compounder. First, they have a return on capital employed of 26%, which is very solid, and an interest coverage of 81 times. This company barely has any debt. They have a cash conversion of 87%, which is extremely solid. This is the ratio of net income that they're able to convert into free cash flow. And then they have a very good profit margin of 45%, which is stunning operating margin of 39%. Now, in their financial analysis, we can see that the revenue, gross profit, and net income has been increasing quarter over quarter for the past 3 years, with their gross margin and their net margin staying extremely consistent at around the 47% and the 35% levels. As we previously mentioned, this company is not a big fan of leverage. They barely have any liabilities, meaning that they are in a very, very safe position, because if a company has no debt, they cannot go bankrupt. The efficiency ratios of this company are a thing of beauty, and they basically let us know that the management knows exactly what they're doing. Just look at the return on invested capital, which is right now sitting at around 37%. This company has extremely low liability risk, as we have seen. They have a very solid balance sheet with almost no debt, and they do actually conduct share buybacks. This company has insane pricing power based on the fact that they actually have almost no cost of goods sold, since insurance companies actually pay them to take the cars away from them, and additionally they make extra money on the side by either auctioning it, dismantling it, or selling it as raw materials. Then they have insane organic revenue growth, as we have seen, very consistent, very predictable, and they have one of the largest moats / competitive advantages I have seen, since this is a low competition, low innovation sector. This company does not tick 2 boxes, however, and I will explain why. First of all, their free cash flow is not growing organically, and secondly, their free cash flow is not consistent. But why is this? Well, this company has the same strategy as Amazon. Every single dollar of free cash flow they get, they will invest back into the business. How? Well, especially in purchasing new locations and expanding their business. This is why they seem like they don't have any free cash flows. And although this is positive because with a return on capital employed as the one that they have, they clearly know what they're doing. I do like companies that produce a stable free cash flow and that it lets investors know how much they're actually having in free cash flows every year. However, I'm not mad at this since Copart is an amazing company and they clearly know what they're doing. Now, for their long-term analysis, it's important to consider that this company follows secular trends as they are into the recycling and reusing of cars market, which is getting a lot of traction in these recent years. Now, for growth potential, I think this company has it all figured out since they're growing at a very quick and predictable pace. However, the two main growth avenues that I would recommend, first of all, geographical expansion. They are already conducting this one and they're already expanding into new locations. And the second one is the new service development, which again, they're also looking into that. So Copart ticks all the boxes once more. In terms of valuation, this company is currently trading at a PE ratio of 40 times, which is above the year average for the past 4 years. And of course, it's important to consider that you will never catch this company trading at a discount. Why? Well, because it's such a high quality business that almost everyone will want to own it. So if you want to buy this company, you should be prepared to buy a sort of a premium. However, I do believe that right now it's not trading at an attractive valuation. Especially if we look at its free cash flow yield of 2%, it's a lot lower than the long-term inflation rate of 3%, meaning that it is not an attractive valuation. I don't believe this company has many risks and possible challenges. In terms of the competitor landscape, this is a very low attractive sector. It's considered boring and not sexy, meaning that a lot of companies will not get into this, and it's a sector that has low innovation, which is perfect for Copart to keep being highly profitable. I do not see any possible upcoming regulation changes coming in the short term, and I do not see any sort of risk in them not meeting their performance objectives since they have been doing so for the longest time ever. The main risk I would identify for Copart is the possibility of economic downturns or cyclicality risks. I put a 50%, meaning that I'm not really worried. However, we should consider this. Used vehicle sales are a very cyclical market or a very cyclical sector, meaning that at some point the revenues should start to slow down. However, until now, looking at the revenues, I have not seen this happen in the previous recession, so I believe that Copart should do just fine when faced with these challenges. Before moving on to my investment conclusion, please remember I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this is a company with a strong competitive advantage, which has consistent, predictable, and resilient cash flows if they wanted to, and that has high return on capital employed, meaning that it can create value for the investor. So I believe that this is a great company and a great investment, especially if you can catch it at a low price, which I believe is very hard to do so. So thank you for watching. As always, this has been the Cashflow Compounder. There's a link for you to join the free Patreon for extra content, and also a link for you to get a free stock when you join Trade Republic or Trading 212.